Hey everyone, it is Julie here with TipRanks. In today's video, we're taking a look at two stocks that Goldman Sachs analysts think could grow by about 50%. Now, both of these stocks have only been on the publicly traded market for a couple of months. So we're going to take a quick look at what it is that they do and what the analyst consensus is for their stock's future. And just before we get into those two companies, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button, and don't forget to check out our recent video for YouTube Q&As. There in the comment section, you can submit questions that you have on stocks, doing investment research, or how to utilize TipRanks the best way. And next week, we will do a video trying to answer as many of these questions as possible. Now, with that being said, let's get into these two growth stocks, starting off with Hayward Holdings. Trading under the ticker HAYW, they just hit the market last month and are currently trading at $17.74 per share. On the TipRanks Top Smart score, we still are missing a few pieces of data since they are new to the market, but they currently come in with a neutral rating for a 7 out of 10. Hayward Holdings is a leading supplier of swimming pool equipment in North America. For over 80 years, they've been helping pool owners enjoy the pleasures of pool ownership by manufacturing cutting-edge, technologically advanced pool equipment worldwide. Their products include a complete line of technologically advanced pumps, filters, heaters, heat pumps, automatic pool cleaners, lighting, controls, and salt chlorine generators. High-quality components engineered to work together to keep your pool at its best. Through their IPO last month, Hayward Holdings made 40 million shares available to the public. Their stock offering was priced at $17 per share and helped the company net $377 million in new capital. Since their IPO, the shares have been hovering between $16 to $18. Coming up on May 5th, investors will get to see under the hood of Hayward Holdings for the first time as they release their Q1 for 2021 earnings report. This will be their first public earnings report since their IPO. For the full year of 2020, Hayward saw $875 million in net sales, which was a 19% year-over-year gain. Several analysts have recently initiated coverage on the Hayward Holdings stock, and one of those is Brian Lee from Goldman Sachs. And he notes that the company has several favorable attributes, one being 6 to 8% sales compound annual growth rate through to 2023, another significant exposure to recurring aftermarket sales with 75% of sales coming from existing pools that require ongoing maintenance, repairs, and upgrades, and secular trends supporting greater spending on the pool pad, with average equipment spending per pool having doubled over the past 10 years, owing to greater technology advancements. Against this backdrop of a solid, stable growth, we forecast the Hayward stock to maintain a leading share position given its pricing power and breadth of technology portfolio, with industry-leading EBITDA margins in the high 20% range, seeing a modest expansion through 2023. Altogether, the Hayward Holdings stock has 8 current analyst ratings, and it does come in as a strong buy. Those ratings include 7 buys and just 1 hold, with an average price target of $21 per share, which would be a 19% potential upside over this next year. Taking a look at our detailed list of analyst forecasts, Brian from Goldman Sachs is the most bullish out there with his $27 price target for a 42% potential upside. The rest ranged comfortably around the 13% mark. The second company we're taking a look at is Diversey Holdings. They also just began trading last month under the ticker DSEY and are currently priced at $15.43 per share. On the TipRanks Top Smart score, they do come in with an outperform rating based on very bullish news sentiment and TipRanks investor sentiment. Diversey is a provider of hygiene and cleaning products, and they serve a variety of sectors, including food and beverage, hospitality, healthcare, and retail. They develop and deliver innovative products, services, and technologies that save lives and protect the environment. Over the course of 95 years, the Diversey brand has become synonymous with product quality, service, and innovation. Their fully integrated suite of solutions combines patented chemicals, dosing and dispensing equipment, cleaning machines, services, and digital analysis. Diversey had their IPO just on March 25th. They made available 46 million shares at $15 initial offering, and from their IPO, they netted $723 million in proceeds. Diversey had $2.6 billion in sales last year. Now, they have been running at a net loss, but that loss has moderated over the last couple years as well. Covering this stock for Goldman Sachs is analyst George Tong. And he says that we believe Diversey has a resilient business model characterized by recurring revenue streams, sticky customer relationships, and essential business solutions. We expect Diversey to realize market share gains to deliver solid average annual top-line growth of 3 to 4% through 2023 that exceeds growth of the broader industry. Over the medium to longer term, we see a path for EBITDA margins to expand from 15 to 20% to approach peer group margins, contributing to valuation multiple expansion. The Diversey Holdings stock currently has 10 analyst ratings, and it comes in as a strong buy based on 9 buys and 1 hold. The average price target is $18.80 for a 22% growth potential. All of those analyst ratings were initiated 3 days ago. George from Goldman Sachs is the most bullish with his $23 price target for about a 50% gain, followed closely by Morgan Stanley with their $22 price target. On the low end, we do have that 1 hold rating at $16 for just shy of a 4% growth. So there we have 2 stocks that are both fairly new to the public market and both just recently picked up a slew of analyst ratings with some attractive upside potential. Now, I always love hearing from you guys, so make sure to leave your thoughts on these 2 stocks in the comments down below. Were you aware of these IPOs or are these brand new stocks to you? Let me know your thoughts. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Any investment decision does need to be made based on your own research and due diligence. Don't forget to check out the YouTube Q&A video to leave your comments on what questions you have for me. I can't wait to hear from you guys. Thank you so much for watching, and we will see you back here next time.